Hi, and welcome to At the Coffee Table podcast. I am Jason Klink. I'm your host of the podcast, and our purpose here is to pull up a chair to the virtual coffee table and discuss anything and everything. We like to try to bring as much value as possible with our podcast episodes. Today, I'm joined by Eric Johnson of Homestead Funding, and our conversation today is going to be on mortgages. And with a majority of my business being in real estate, and with the state of the pandemic world right now, I thought it would be bring all the listeners a lot of value to talk about mortgages and industry, especially if you're considering buying or selling either during the pandemic crisis now or after things ease up a bit. So, Eric, thank you for joining me today.
Thanks for having me, Jason.
Yeah, absolutely. So kind of go into your background a little bit, your company, and where you started and where you're at now.
Yeah, so out of college in 2001, I kind of started, in the finance industry and came over into the mortgage piece of it, and later on in 2001. So I've been doing this since then. I currently work for Homestead Funding. I've been here now for about a year and a half. We're a mortgage banker out of Albany, New York. We're in about 30 different states. My office here is in East Syracuse. So we, typically do 1 to 4 unit properties for primary residence, second homes, and investment properties. It's all residential, and all we do is mortgages. For purchases and refinancing. So it's been an interesting year thus far. The beginning of the year was extremely busy. We've had low rates, a lot of buyers in the market. As you know, inventory's been a little low. And now, things that we're dealing with here with COVID-19, there's been quite a few changes as well.
We had Eric did training for my real estate group the other night, and we had talked about, and one of his highlights of the training was talking about the difference between you being a mortgage banker and a financial institution like a bank or a credit union. Can you go into that a little bit?
Yeah, and being that we're a mortgage banker, we have the ability to service the loan ourselves, or we could sell the servicing post closing, which gives us just a lot more opportunity as far as different loan programs and different outlets that we have. We do government loans, USDA, FHA, VA loans. We can do Sunny May, which is a first-time homebuyer program, and then we have all the different conventional programs available as well. We also do work here locally with a lender that portfolios other loans. Whereas a bank or credit union, they pretty much just stick with what they have. They don't look outside to other resources.
So I guess, and what I try to explain to a lot of my buyers most of the time is trying to explain the difference of the business that you do and being a mortgage banker, and kind of casting a wider net to find a mortgage with the best terms and conditions and as far as the loan goes versus the bank they normally do business with. And, the buyer clients are free to do business with whoever, but I think I've had a number of conversations here recently because I still have buyers that are researching homes and researching mortgages, and there was quite a couple, 2, 3 that I had to reintroduce this information to kind of explain, and I find it to be common that they just don't know the difference. I even had a buyer that thought that with Homestead they had to have a checking account there because it was like a bank.
Yeah. There's a lot of information out there. People go online, they can there's a lot of misinformation too. They can go online and they can find a lot of things that technically aren't exact. So we get that question a lot. I had a client yesterday that asked me, why would I want to work with a mortgage company like the one that you're at versus going to my own bank? And a lot of times, we are a little bit more competitive. We have a lot of, like I said, different options, opportunities, just because we have so many different investors and servicers that we can sell loans to, and they're not all the same, and rates can vary. So when we're looking at lock in rates, we're just, like you said, casting a wider net. We're looking at a lot more opportunities for the client.
Which is, I think just gives them better options, give them a
Mhm.
better experience all the way around. I think having those options. Now, given the current environment and kind of, and I told you this before we even started that I like to do a past, present, future segment. So, kind of give us an insight on pre-pandemic and what the mortgage and home buying industry looked like to you, and versus current situation and the current environment.
Yeah, pre-pandemic, I mean, we could do, government loans, depending on the type of loan, we could basically go down to a 580. Most of the borrowers, were probably 600 and up. There was still a small percentage that, we were doing for under 620. Okay, because a lot of times we'd have to have a lot of compensating factors in order for us to do those types of loans.
Right.
Right now, our minimum FICO score is at a 660. The investors and servicers that we, can sell loans to have increased their credit score requirements due to what's going on with people being laid off, furloughed, maybe reduction in income. Even if people haven't been laid off, some people are getting pay reduction or reduced hours. So, with lower FICO scores, credit scores, maybe also those programs allow a little bit higher debt to income ratios. The servicers and lending institutions look at those as possibly a higher risk type loan. Therefore, they want to see a little bit higher credit scores. Now, this pretty much went into effect over the last couple of weeks. So going forward, as things get back to somewhat normal, we could see those things loosen back up a little bit, but it really just depends on what happens here, over the next few months.
Do you think, is it because the financial institutions are kind of trying to avoiding the 2008 mess?
Absolutely.
Yeah.
Absolutely. They're going to look at loan performance, and also people can file for forbearances on loans right now. And ultimately, when that happens, whoever's servicing that loan is still on the hook to make those payments. And then they go back to the client later on, and the client then is still responsible for making up those month's payments. Some servicers might do that in a lump sum, like, you got to do this after 6 months. So there's, this is new for all of us, and it's new for homeowners. And unfortunately, during this time with people getting laid off, sometimes people have to, apply for forbearance.
Right.
So because of all this, and we've talked to a lot of people, that have been laid off during the mortgage process, and we've got to wait for them to get back to work. But, we don't know, it could be 2 weeks from now, somebody else might get laid off.
Right.
And because of this, there's been some changes here as well in the industry, as far as us, really have to verifying that people read up pretty much to the closing date or a day or two before that people are still employed.
Right.
Because, somebody could get laid off on a Friday and we're supposed to close on Monday,
Right.
so there's a lot of extra due diligence on our end. And there's a lot of conversations, obviously, with our clients that are in process or people that are still actively looking to make sure that they're safe with their employment and their income.
Right. Do you see that even with the lenders that they're requiring more money down as far as this goes?
Down payments have not changed at all.
Okay.
We haven't seen that change, nor do we. I mean, it could happen, but I have not personally heard of any of those changes coming as of yet.
I posted content the other day of trying to educate, my followers on, the difference between 2008 and now, and what, how recessions kind of bolster the real estate market, and how really the factors that were in play in 2008 aren't necessarily in play now, because
Correct.
Consumer confidence was still kind of is high. The mortgage rates are low. There's obviously more regulation since 2008.
Right.
So do you agree with that there's distinct
Absolutely.
differences?
Yeah, the difference between 2008 and compared to today is that in 2008, and prior to that, there was a lot of different loans out there that were being done with stated income, no doc type loans, very,
Hmm.
very risky type loans. And they're based solely, on the customer's credit scores. Um, Now, I mean, we've have not had those loans
Hmm.
since 2008. Everything has been underwritten as far as income, assets. Everything has to be well documented. So the loans that are being serviced out there now since 2008, it's a much cleaner portfolio of loans. And why we're not seeing the foreclosure rate and the fallout that we had back then. So it's completely different.
All right. Have you seen now? I know all of us are virtual now. I mean,
Yeah.
with the EXP Realty, with that I am an agent with, they were virtual before this even started. But a lot of brokerages, as far as real estate end, had to really get tech centered and
Mhm.
set up shop virtually. I know that you and your group have been virtual this entire time. Have you seen closings? I know they've changed, but have you seen them get held up? Have you seen difficulty trying to get to the closing table, closing, transactions, that kind of thing?
Um, well, I can speak for us as a lender. I mean, we've been working remotely since this has started. So pretty much for the last month. So we're able to originate the loan, meaning taking the application, we underwrite it, we process it. All of our staff is basically remote.
Hmm.
But we're set up with the software that we have and the technology that we have, and to be able to do that and really not lose any functionality. Even our closing department, everything's done by electronically secured. So we really haven't seen many delays. Sometimes there's some delays because the attorneys are also doing stuff remotely, and they have to get stuff through title companies, and there could be some delays there a little bit, but for the most part, everything's been running pretty smoothly.
Hmm.
The attorneys that do our closings have been phenomenal. To be honest with you, making things work,
Right,
getting things to the closing table. It's a group effort. I mean, real estate agents all the way through. Being able to get stuff done,
right.
um, and keep things moving along so that people can close on their house or close on the sale of their house. Maybe they
Hmm.
need to downsize,
Right,
or other things. So for the most part, everything's gone through pretty well. Only delays that we've seen is if people were laid off, and then we've
right,
got to wait. And for hopefully they can get back to work here soon.
right. Yeah, absolutely. I know that some of the content that I've been absorbing and trying to learn from, because I follow Jared James, who is a real estate coach, and he was talking how this pandemic crisis has exposed companies for not being tech centered,
Mhm.
and maybe it opened the eyes for certain business owners, no matter what the business is, that having these virtual employees, a home based, home office, virtual office, may open their eyes to maybe they don't need that $12,000 a month lease
Right.
payment to get work done. And I think it's caused a shift in a lot of industries, ours included, um, as far as doing business going forward and the survivability of the business based on the technology that's available. I think that if this was 2008 or sooner, 2001 when you started, it'd be a whole different
Yeah.
outcome, set of outcomes.
Oh, absolutely. Yeah. I mean, the amount of money that like our company and other companies like us and, you, for example, businesses have put into the technology piece of this.
Mhm.
And that's where the business is going, but there's been a lot of investments in order to operate this way, to try to reduce some of the brick and mortar
Mhm.
expenses. And there's probably an argument out there if is staff more efficient, working remotely, being that there's less distractions.
Right.
Me personally, I think that depends on the individual.
Right.
It's
Right.
different for everybody.
Yeah.
I'm in the office today. I'm trying to come in once or twice a week and stay home. for
Yeah.
the other part of the week. But I'm an
Right.
office person. I need to be in here too. I feel more productive sometimes.
Right. No, no, I get it. Yeah, I saw something the other day where a real estate expert, we'll call him, was talking about how the real estate market has been a kind of a bull market itself for a better part of 10 years, and that at some point it needed to change. And this may be the catalyst to change it because nothing else was. Everything else was so good and going so well. Um, I looking at everything and trying to learn as much as I have, I see how if the real estate market goes into or stays in neutral, the longer it stays in neutral, the more it has the tendency to shift. Where do you see real estate and the mortgage industry going forward over the next set of 3, 4, or 6 months?
Um, Tough to tell, honestly.
Yeah.
I think rates are going to stay low.
Okay.
I do believe that. I think they have to, in order for the economy to come back strong and get back on track.
Right.
Um, you know, a lot of it, like here locally in central New York, inventory and has been an issue, as you know, and I think that's a national issue. But here, I can speak for,
Hmm.
we have a lot of buyers. I've personally have buyers that have been looking for 2 to 3 years, and may have put offers in on 6, 7 different houses and just cannot get an accepted offer because of a competitive situation with other buyers.
Oh yeah.
Um, so I think even after people start to get back to work, I think there's going to be, uh, it's not going to go back to what it was. I
Hmm.
think there's going to be a lot of people out there just kind of waiting because they want to get back to work, maybe, replenish some of the funds that they had, bank accounts, save up some more money,
Hmm.
try to get away from this situation a little bit.
Hmm.
And then I think we'll see things kind of come back. But you know, every day there's changes.
Right.
Try not to watch the news too much, but every day
Right.
we hear something different. So I think it's kind of unknown at this time.
Hmm.
But we still have clients out there buying.
Yeah.
Rates are low. And if people can go out and look at houses safely, and they're not concerned about their employment status, their income, um, it's a very, very good time to buy just because of low rates. Um, and there's still houses there, and there's people that are listing houses because they need to sell,
Hmm.
for whatever the reason may be.
Right. I keep telling all my clients, buyer or seller, it's kind of tricky waters that we have to manage through. We can't just run out and start walking through a house because the house is occupied. The sellers don't really want extra people in there
Right.
and for good reason, based on what's going on. So now we have the virtual showings, the virtual open houses, trying to,
Mhm.
do showings by video, and that's the trust level kind of has to be there because the client has to, especially on the buyer end, has to really trust their real estate agent to say, give them their honest opinion of what they're seeing. Luckily, home inspectors, as far as I know, I don't know if you've heard different, home
Right.
inspectors are still essential, still doing their work, and are
Yes.
still able to go through a home top to bottom, side to side.
Correct.
So I find that it's still kind of that safety net for buyer clients, anyways, when it comes to buying a home.
Yeah. Yeah. It exactly. So even if they're not able to walk through it, you know, prior to putting the offer in, at least they have the home inspection to kind of fall back on. Home inspectors during this time too have been enormous, as well as appraisers. I mean,
Hmm.
um, you know, being able to go out there and do what they do, um, to for us to be able to get to the point to where then we can get the loan into process. Because between you, the home inspector, and the appraiser, all those, the home inspector and you guys have to do that before we can even do anything.
Right.
So there's obviously a lot that's going into this.
Hmm.
A lot of different obstacles and hurdles that we have to try to figure out how to get around. But for the most part, though, we're seeing that get done.
Yeah, patience is
Yeah.
definitely a virtue with this. So I guess I'll end with, what's your biggest or best piece of advice for home buyers looking to buy right now?
Communication. You
Hmm.
know, um, you know, get your pre-qualification in place. We deal with a lot of clients that, yeah, maybe they're not looking to purchase this minute. Maybe they want to wait a couple months, but take advantage of this time to get us the information that we need. So that way we know that, let's say a month from now or 2 months from now, there are no obstacles that we have to work through in order to get them qualified. So even if people are laid off, I mean, we've got people right now that, clients that have been laid off, but they still want to go through the pre-qualification process. Now, I can't technically pre-qualify them because they're not currently working, but assuming that they're getting, going to go back to work at the same pay wage, then we can pick it up and, at that time and just kind of, get that pre-qualification out.
Right.
And we know that we've worked through their credit, if they did have any credit issues, but also gave them the information as far as, how much payments would be on a, $200,000 house versus a $150,000 house. Also prep them as far as getting their assets in line, for down payments and different programs that may work for them. So even though that, the houses might not be out there right now, or people don't actually want to go into homes, they should be using this time to get the pre-qualification and their budget, squared away and get them in shape to purchase a home as soon as they can.
Right. Great advice. And so, Eric, what's the best way for people to get a hold of you if they wanted to research mortgages?
Yeah, they can call me on my cell phone, which is 315-727-2023, or they can email me at ejohnson@homesteadfunding.com. I'm available via cell phone or email or text pretty much all the time, as you're aware.
Yeah, absolutely. Day, night, weekends, Eric's there anytime you need a question answered. That's for sure.
When you're working, we're working.
So. Absolutely. Great. Eric, thank you for joining me today. I think this is great information, and I think a lot of the people watching and listening, will get a lot of value out of this. It's streaming, on Facebook and YouTube. I'm going to download the audio to Anchor so it can be put out there and we can get this out to as many people as possible. I think it's great information. So again, I appreciate your time today.
Yeah, appreciate you having me.
Awesome. Hey guys, this is At the Coffee Table podcast. Again, we pull up our chairs to the virtual coffee table to talk about everything and anything. If you have any questions, please drop a comment, send us a DM, and share this with anyone you might feel would get any value out of this. And feel free to contact Eric or I anytime with any kind of real estate needs. With that, everyone have a great day.
Thanks, Jason.